Are we ready for the economy to reopen, and what can this mean for investors? Joining me today is Peter Hug, Global Trading Director of Kitco Metals, and I'm David Lin. Peter, welcome back.
Nice to be here, David.
We're going to talk about your price forecast for gold at the end of this interview, but first let's talk about the economy. We're seeing the majority of states now reopening their economy, or at least partially reopening. Is this the right time?
I'm not a doctor, but I do think it's important to get the economy reopened. The longer it stays closed, the damage just incrementally increases. I'm skeptical that the way the economy is opening right now is going to be successful. Restaurants opening at 25% capacity. I'm trying to be optimistic here. It's a good first sign. I think we'll know within the next week or 10 days whether this decision is a good decision or whether there's a second wave coming. And, I'm hoping beyond all hope that we've got this under control and we can start to slowly open the economy, which is absolutely crucial, not only from an American or North American perspective, but from a global perspective, to get people back out to work, get the supply chains reopened, and come back to some kind of normalcy, whatever that's going to look like on the other side of this equation. So I'm optimistic, but again, I think the jury's still out. We'll have to see, what the reported cases are over the next week or 10 days to see if this early opening of the U.S. economy has created a second wave. And that right now, the jury is still out. And again, I'm got my fingers and everything else on my body I can cross that we won't get a second wave, and we can then move into phase two, where we can become a little bit more aggressive in opening up the economy and start to get businesses generating revenue and people getting their jobs back. And I don't see how you get unemployment back down from 18% back down to 3%. I think maybe 10, maybe 12. So it's going to take a while for all of this stuff to re-normalize and become the economy that we knew back in January, February, before this mess started. So the stock market, from a valuation perspective, appears rich to me.
Something I've noticed, Peter, is that the first states to reopen or to announce partial reopening have mostly, not all, but mostly been Republican states, whereas the states that have stayed shut down the longest have been Democrats. So are you surprised to see sort of a bipartisan divide coming out of this issue?
What can I say to that? All I can say to that is you would tend to think that given the current pandemic in the US, Canada, the world, that the political leaders would come together and form a unified coalition for the benefit of their citizens. And when you see these partisan sort of issues, to me, it gives me a feeling of disgust that their political priorities seem to outweigh the priorities of the people that they are supposed to represent. And I'm looking at this and I'm seeing how that they're fighting back and forth. And to me, I just find it absolutely amazing that even under these circumstances, that the political parties cannot come up with a unified approach. Because everything in their minds is political and geared to this year's election. I would tend to think the Democrats are probably doing everything in their power to impede the resolution of this issue, to make Trump look as bad as possible so that he'll be defeated. And Trump and the Republicans, on the other hand, are trying to pass the buck to the Democrats, saying if it wouldn't be for them, we'd be way ahead of this game. So blame them and vote for us. And again, I find that absolutely disgusting given the current situation. But again, who am I to say anything? I'm just a guy, and I'm just giving you my personal opinion.
If that's the case, how do you feel about gold? Is that accurately priced, do you think?
People are, I think, disappointed in gold. This is not the financial crisis of 2008. This is a health crisis. And, gold did rally from 1,500, to the mid 1700s. Now it's sort of straddling the $1,700 mark. And everybody's anticipating that gold should be at $3,000 an ounce. And because of the Fed stimulus and the $2 to $3 trillion that have been added to the balance sheet, And, the primary sort of logic behind that is that's going to create massive inflation down the road. And, I'm just not convinced that massive inflation is imminent. Today, the CPI numbers were the worst numbers that were reported since, I think, 2016. There's just no demand yet, and it's going to take a while for that demand to regenerate. People are basically deferring their rent payments right now, and, they're trying to hoard cash. They're not going to be chasing goods, except for necessities. So I don't see the equation of supply demand creating massive inflation in the short term. I see it as a consequence possibly in a year from now, or maybe a little longer than that. So in that context, I'm very, very bullish the precious metals over the medium to longer term. Short term, I wouldn't sell gold. I just think you need gold in your portfolio, given the current risks both to the equity market and to the economy. But you're not seeing that same type of investor engagement that you saw back in 2008, 2011, because for the most part, investors, sort of the medium investors, not the people with serious money, but the medium investors don't have disposable cash to throw into the gold market. So, that's created some issues. The other issue is that the physical supply of investment product has been extremely expensive because of the shutdowns with the refineries and the global mints. Premiums on investment bars and coins have been ridiculous. And again, for the past 4 weeks, I've been hammering on the table, don't be chasing these premiums. They're ridiculous premiums. I guess they're justified because the supply demand is in favor of demand, but there are other options to buy and wait until the premiums come down, and they are starting to come down. Silver is a different story. Silver is still backlogged. The dealers in the U.S. Again, we weren't in this game. We're selling Silver Eagles at $10, $12, $15 over spot. In anticipation of receiving future production. Yeah. And, they're still not caught up. When silver was at $15, they were selling Eagles at $25, $28. And they can cover these Eagles now at about $3. They're just behind because they've oversold, and people unfortunately went and paid that that $12, $15 premium. But again, supply is starting to come in the market, and it wouldn't surprise me to see Silver Eagle premiums down somewhere in the neighborhood of $5 within the next 3 to 4 weeks.
Thank you for clarifying that, Peter. I'm sure a lot of viewers would appreciate that. And thank you for being with us today. I appreciate your thoughts.
No, my pleasure.
And thank you for watching Kitco News. We'll have more for you later. Stay tuned.